All right, Brian, are we ready to go?
Let's do it, John.
Perfect. All right, welcome everyone. Today's webinar is Set Your Business Up for Success. And really what Brian Koegle and I are going to focus on is protect what matters most in your business. And so let me just do a quick intro. So my name is John Vance. I'm the president and founder of Vance Wealth. We provide comprehensive financial planning, tax planning, and business planning services to business owners and families. And our esteemed guest speaker today is Brian Koegle. He is a partner in the Employment and Labor Law Department of Poole, Shaffery Koegle, with a focus on labor and employment law. Brian provides counsel to employers across various industries regarding hiring practices, employment contracts, wage and hour issues, compensation, discipline, and termination matters. So we get to have a lot of fun today talking about all the fun California rules, and then we're going to get into some things as we go through that around proactive planning and how to, really just help you run a better business and make better decisions. So, Brian, thanks for joining me today. I am looking forward to our conversation.
Appreciate it.
Absolutely. So, one of the things we want to just kind of start with is just an open conversation between the two of us is around, challenges for business owners, the things that we're seeing, that's really been going on for probably the last 2 years, especially during COVID. And the big area that I know Brian and I talk all the time about this is around finding, retaining, and attracting employees. And, when we look at the dynamic of an environment where the unemployment rate, there's actually more people, there's actually more jobs than people looking for work. That's a problem, right? And so what are you seeing in that dynamic when you talk to your business owners, and how are they handling some of these issues?
Well, the word panic comes to mind. I think that in every industry across the various platforms, whether we're talking manufacturing, retail, restaurants, heck, even professionals, it's very, very difficult to find and attract talent right now. Studies have been done about the fact that there have been incentives such as California's supplemental paid sick leave. Additionally, the additional pandemic unemployment assistance, paying people to stay at home, basically, has artificially depressed those individuals out looking for a job. Well, those both sunset. Those all sunset on September 30th, 2021. The unemployment numbers that came out this morning, by the way, nationwide are good. The number came in lower than what was expected, with fewer new claims for unemployment over the last 1 week period. So I'm hopeful that people are getting back to work. But quite honestly, employers have got to change their perspective. The problem is what got us through or to the beginning of the pandemic and partially through the pandemic is not going to work with what's going to look like the business of tomorrow. You have to be more flexible. You have to be prepared to talk to your employees, figuring out what it is they're looking for, what it is they want, whether that's a flexible schedule, whether that's allowing them to work from home or remotely 1, 2, heck, 5 days per week. Businesses are shifting, and the way we did business before is not going to be a satisfactory way to attract and retain talent today. And then the other thing is, quite honestly, employees are looking for something different. They're looking for something unique that is fulfilling for them, not just a paycheck every other Friday. They want something that is going to mean something to them and that they know that they're going somewhere. So delivering the message by a business owner on what it is that distinguishes you, what makes you different, why you're special over other options out there is going to be a critical part of attracting talent in the next 2 years.
Yeah, well, and I guess, how do you think the business owners are going to deal with the fact that they're going to have to pay their best employees and the new employees are trying to attract a higher wage? Doing business in California is now coming with more and more compliance from not only all the employment law pieces, but from benefit requirements for healthcare, for 401k, for all of those things. How do you think business owners deal with that? Because does that just cut into their margin? Or are they truly going to have the ability to pass that on to the end customer? And I think that's something that a lot of business owners are grappling with.
They absolutely are. And I mean, really, it depends on your industry. I mean, at one level, you look at the low-level retail and restaurant industry, and they don't have the ability to pass along costs in the truest sense. they normally are eating those as cutting into their margin, because if all of a sudden they raise their prices, their customer base goes down, and they are working off of a volume-based business. Now, a lot of folks in the manufacturing or distribution areas, they are able to pass along some of those additional costs. And really what it becomes is educating your clients on why it is your prices are going up. Listen, there's nothing we can do to control the minimum wage thresholds in the state of California. There's nothing that we can do, as we'll talk about later today, about the requirements to provide CalSavers or a retirement option for your employees. These are all government mandated requirements. And if you're telling your clients, this is what's coming down the pike, and they're aware of it, and you're keeping them apprised, and you're communicating frequently, quite candidly, businesses that are out in front of this have been successful in passing along some of those costs on the back end to their clients or customers.
Yeah, absolutely. And, one of the things just as if you're in a business that you're trying to grow and attract talent, one of the things that a consultant had really told me is, if you're always looking for new customers, right? You're trying to drive sales, but one of the new, I guess, realities of running a business is you're going to need to always be looking for employees, because your best future employees have jobs elsewhere. They're not on the job board. They're not looking for jobs. So finding a way to brand your business, whether it's through LinkedIn, Facebook, social media, engaging with the community, so that when you're ready to hire, you've identified ahead of time and made your business more attractive, your brand more attractive. And it's something that most business owners never even thought of, because they just, when they're ready to hire, they go to the labor pool and they hire. But in this dynamic, we're seeing that's harder and harder to do.
Well, and John, one of the other things that I'm seeing is I've seen many, many more employers offering incentives to their current employees to bring in other talent, saying, hey, who do you know that's a good worker? Who do you know that can do the type of work that you do that we can bring in? And we'll pay you $500 or $1,000 if that employee works out for us and they stick around for 6 months. So those type of incentives are becoming more prevalent, although I do want to caution employers on that. Be careful not to hire the cousin Eddie, or my brother who's been out of work for 9 months. You still have to go through your due diligence to make sure that the person is a good fit for your culture and for your work ethic. But fundamentally, if you've got people who say, I know this person and I trust this person, and that's a good employee for you, then you need to take that referral and run with it.
Yeah, and I have another follow-up question. This might take us down a little bit of a rabbit hole, so I want to be careful. But one of the things that is kind of shocking to me is you're seeing headlines every day how the average company like Amazon and a lot of other businesses are raising minimum wage, and they're doing these things proactively because they know they can't retain the talent. So why are we seeing a lot of states like California force mandates on businesses when businesses are already taking the right action because they have to be competitive? And is that going to slow down, or is that just a trend we have to live with? And the California answer, I think I know, but I just wanted to get your perspective on that.
Yeah, I mean, listen, I think that the political drive to $15 an hour was motivated by personal greed by a lot of folks. And I don't think that it did take into account that for the most part, corporate America does want to do the right thing. And as labor becomes an important asset, as human resources become some of the most important resources your business has, then obviously the drive is going to be well above minimum wage in order to attract and retain that talent. Other states have been able to do it. I'll be quite honest with you. In the great state of Texas, the minimum wage is still at the federal standard of $7.25, but most businesses are paying between $12 and $14 an hour to attract and retain talent. And I'm talking about low-level introductory work at retail, at restaurants, at unskilled labor. Those type of positions are having to pay that in order to bring people in.
Yeah. Okay. Well, we're going to transition now from this kind of big picture today around the challenges for business owners, and there's many, and we're going to get a little bit into the weeds on some of the things that we're seeing that business owners have to deal with. We want to get into some specifics around that, just so that you're aware of some of the rules, because we really targeted this to the small business owner, and unfortunately, a lot of business owners aren't really aware of all these rules. So we wanted to remind them of them. And then also be a resource at the end. We're going to make an offer if you'd like to have a quick call with us to ask any questions. We're happy to. So I'm going to dig in. We're going to jump back and forth between myself and Brian as we cover some of these topics. And so the big one here, and this kind of comes down to this benefit conversation. So too often than not, I hear business owners will tell me, oh, my employees want a 401k. And I say, great, let's put a 401k. Well, it's too expensive. And then they're losing employees. And so at a very high level, if you're going to attract people, you need to have a benefits plan where people feel like you have skin in the game and you're offering them things that other companies are. So one of the things that California has mandated, and this was a few years back, is the implementation of a Cal Savers program, meaning if you don't have a 401k, a simple IRA, a SEP IRA, some level of retirement plan, then you will be required to implement this Cal Savers program. And you can see in the top right, we have these deadlines. There was already a deadline. This deadline passed over 50 employees, June 30th of this year. If you have over 50 employees, you had to offer either Cal Savers or some alternative retirement plan. One of the things that is, I think, fairly shocking to a lot of the small business owners that we're working with that are in the 5 to 25 range is that this is now going to apply to them starting next year. So this is going to be a mandate of putting something in place. And so our recommendation is we got to be a little bit more proactive. You don't want to wait till the last minute to get things put in place. But let me just walk through a little bit of the basics. I will tell you that I'm not a big fan of the Cal Savers program. I don't think it is a benefit. It's just a mandate. And if you look, we just kind of have side by side. So the Cal Savers program, one of the things is you as the employer are not putting money into it. So it's not a benefit to the employee. Now, the reason why a lot of businesses, especially if your margins are tight and you don't have good profits, they're opting for Cal Savers is because it's easy and it doesn't cost you anything. However, this is not really a true benefit. So you can see some of the notes on there. The maximum amount you can put in is $6,000. So as a business owner, if you want to put money away, you're going to be capped at $6,000 if you offer the Cal Savers program. It's considered a Roth program, and there's basically no match, no contribution. If you look at the 401k option, and we can get into today, we're not going to get into the weeds, but you really can get into designing these to be a lot more flexible for your employee base. But if you start looking at eligibility requirements, you can set that at 21 years old. You can set service requirements, meaning they're not eligible for a 401k until you've had 1 year of service. The compensation, or I guess the base on how much you can put in is based on your W-2 compensation, and you can and basically this year it's $19,500 plus $6,500 if you're over age 50. And so one of the nice things is you can put a lot more money away in either a traditional 401k that's deductible, or you can use a Roth provision, which is pretty nice. The one thing is, we're seeing where a lot of employers don't want to put in place at the very bottom. You can see employer match yes at the employee's discretion. So one of the things we're seeing is if you just have a 401k with no match, most employees don't look at that as a benefit. And so we prefer a 401k. There is some more cost to it, but it's really investment in yourself because you can take advantage of it as the business owner. And I'm going to go through some strategies on how to implement this for your family. But if you have questions on this, and I'll kind of run you through, if you want to do Cal Savers, do it. You're going to have to put that in place by those deadlines. If you don't want to do Cal Savers, we can help you. We have a team of retirement plan specialists. We can create a custom solution for your business based on the tax saving strategies you want to do. We can also put something in place to, really educate and provide financial wellness for your employees so that they're incentivized to save. Because too often than not, young people aren't saving. They don't view the value of it, and we can show them the power of compounding and how much their accounts will grow over time if they stick to it and have patience. So that's just a little bit on Cal Savers. And what I'm now going to transition into is this whole idea around planning. As business owners, I think we get caught up too much just working in the business. You're grinding, you're working long hours, and we forget to step back and work on the business. We forget to really look at, okay, what are the important things that I need to do to drive my business forward to be healthier a year from now, 3 years from now, 10 years from now? And too often we're just stuck in all the urgent items, putting out fires. And so a lot of what Brian and I are going to talk about is how to be a little bit more insightful, a little bit more thoughtful. And we're going to kind of dig into some of the rules right now, the California laws on wage and hour. And I'm going to let Brian kind of take this and just help you understand the landscape that we're living in right now.
Yeah, and John, that's actually a great transition, because the way that I look at this is if you're not being proactive in these areas, it's just a matter of when not if, you're going to find yourself in trouble. The number of wage and hour claims in California from 2020 to 2021 have increased by 300%. Now, a part of this obviously is attributable to the fact that during COVID, everybody was in scramble mode. There were fewer lawsuits filed on wage and hour issues. I get that. But 300% is a drastic increase. And when you look at the number of claims that were filed in 2020 compared to 2019, there certainly wasn't that big of a drop off. So what I want to make sure that everybody knows is the basics. And I know most of you on this call today are smaller businesses with those that have under 50 employees. So I just want to go through some of the primers, specifically starting with minimum wage in the state of California. As John and I had talked about in the first call, John, go ahead and put it on that first slide if you don't mind. As we had talked about a little bit earlier, California has its own rules and regulations as it applies to minimum wage. And everybody knows this by now, but I don't know that a lot of you really understand that depending on where you're doing business, depends on which minimum wage is going to apply. The state of California obviously has its own state minimum wage requirements and obligations, which as of January of this year for smaller employers, meaning if you have 25 employees or fewer, you are at $13 an hour. However, that same small business, if you are in the city of Los Angeles, or if your headquarters are in the unincorporated areas of Los Angeles County, meaning it's not in one of these small cities that have been designated, Glendale, Burbank, Pasadena, Long Beach, Santa Clarita, Palmdale, Lancaster, not completely exhaustive, but pretty exhaustive. If you're not located in one of those small townships or separate cities, then the County of Los Angeles minimum wage will apply. And that is $15 an hour right now. There are some businesses that have a business location outside in the unincorporated area of Los Angeles County, and then one of them inside the city of Glendale. Well, guess what? There are two minimum wage thresholds that apply in those circumstances. But good luck if you're trying to attract and retain talent at $13 an hour when the employee can go right across the street and make $15 an hour for the exact same job. So be aware of this conundrum that you're facing from when it comes to minimum wage, because it doesn't just have an impact on your introductory employees, not just your bottom line. This has a trickle up effect. Every time the minimum wage goes up in a state or in a county or city, everyone else is looking at the business saying, well, wait a second, I was working at $17 an hour and now everybody moved up $1. Shouldn't I move up $1? So that $17 an hour employee now becomes $18 an hour. And it trickles all the way up to your exempt employees, those people who are exempt from overtime and exempt from meals and rest period requirements under state law, because those exemptions have to meet a minimum salary that's also tied to minimum wage. So you really do need to look at this holistically and be proactive, making sure that you're reviewing this at least twice annually. Once at the beginning of the calendar year when the state minimum wage goes up, and second on July 1st when both the city of Los Angeles, County of Los Angeles, San Diego, San Francisco, and Oakland all raise their local municipal minimum wage standards. So that's a good thing for you to put on your calendar every single year to help remind you. So just a couple of the basics on overtime that I want to make sure that everybody is thinking about, because California is unique. California is one of 3 states in the entire United States that applies an 8-hour overtime rule in addition to the 40-hour rule. That means if somebody works 9 hours on one day and 7 hours the next, that doesn't mean that it balances out. It means that you're paying overtime for the first day because they worked in excess of 8 hours in a day. So they get 1 hour at time and a half. And then the day that they work 7 hours, there is no overtime, there is no penalty, but there also is no credit for the earlier hours worked. That is not what the federal standard is. That's not what it's like in 47 other states. In 47 other states, you could have somebody working 10, 11, 12 hours in a day. And as long as they don't pass 40 hours in a week, there would be no overtime accrued in that circumstance. California also throws in a double time requirement that says if an employee works more than 12 hours on their regular days of work, or if they work on the 7th consecutive work day in a work week, more than 8 hours, they get double time. That's 2 times their regular rate of pay. Make sure you've got these right. You should have this in your employee handbook. You should be communicating it to your employees on a regular basis. And then when payroll comes out, you should be reviewing it before the check goes into the hand of the individual employees to make sure that those calculations were correct and accurate.
Hey, Brian, I have a question. So one of the things I know a lot of small business owners will have some admin staff or even office manager type, and they, years ago, they just said, okay, salary is going to be easier. They don't need to clock in and out. I want to have a really flexible work environment. I don't, they've never had to do it. I know if you can go through the rules. I don't remember what the total salary amount is, but I think a lot of the small business owners don't really understand how much they need to pay in salary if they qualify as an exempt employee.
Yeah, so I will tell you this much, regardless of salary, very, very, very rarely does an administrative or executive assistant qualify as exempt under the California overtime standards. That loophole was closed in 2005. But in order to qualify any worker for an exemption, you have to jump over two hurdles. The first, as you said, was the minimum salary threshold. For those of you who have 25 or fewer employees this year, that minimum salary is $58,400. If you're paying less than $58,400, it doesn't matter what their duties are. They could be the CEO of the company and they are not deemed executive exempt. They do not fall into the category of someone who doesn't have to be paid overtime. That minimum salary threshold must be satisfied. And then if you make it over that minimum salary threshold, that hurdle, then we have to look at the duties, the responsibilities, the obligations, and it really comes down to job descriptions. What is in writing as to what the expectations are for that person to do exempt style duties? What are exempt duties? Executive functions, hiring, firing, promoting, demoting, making decisions that bind the company. Those are the types of things that qualify for an executive exemption. And there are 6 other exemptions, but again, it's very important to make sure that your job descriptions meet with A, what the employee is actually doing on a day-to-day basis, and then B, that it meets the threshold requirements to meet one of those exemption standards so that you can make it over the second hurdle and say, we have properly classified this person as exempt. Too many employers, John, just say, hey, it's easier for me to pay this person a salary. I don't care how many hours they work. Well, unfortunately, that's not the way the rules work in California.
Yeah. Okay. It's a healthy reminder because I know people can get in some trouble there. So I'll let you kind of move on to the meal and rest periods because I know this is a hot topic right now.
It is. And unfortunately, it's probably the hottest topic that we're seeing, if not the hottest number 2. Meal and rest periods, guys, are easy mistakes. And guess what? If you make even one mistake, you think, oh, well, shoot, that's not a big deal. Well, if your employee who missed his meal period or didn't get a timely meal period or isn't getting a relief on his rest breaks where he doesn't have any work to do during his 10-minute rest periods, then the employee can bring a claim not just on his own behalf, but on behalf of all employees who work for you that are non-exempt. All of a sudden, these cases get turned into what we know as PAGA cases. You may have heard this before, Private Attorney General's Act. It is like a class action, only far more painful for business owners. And in California, we call it the sue your boss law. It makes it very easy for people to bring a claim against their boss for failing to comply with the very, very particular, very specific meal and rest period policies. I've got a little handy dandy chart that's up here on the screen for you, but let me just break it down. Assuming that you've got an employee that's working a regular 8-hour day, they're entitled to 1 30-minute meal period and 2 10-minute rest periods. The meal period is off the clock. You do not have to pay it, but you must make sure that it begins before the employee completes 5 hours of work. That means that if your shift starts at 8 a.m., you go 8 to 9 to 10 to 11 to 12 to 1. At 1 p.m., their lunch period is late. So you start that lunch at 12:45 or 12:30. If you started at 1, it is out of compliance and you owe a penalty associated with that. 2 rest breaks, they're supposed to be split up in the middle of the shift on the either end of the lunch whenever possible. Those are on the clock. That's on your dime. You're paying them to take a break. Go have some coffee, step outside, get some fresh air, use the restroom, go talk to friends, whatever, but it must be relieved of all duty. You can't ask them to do any work when they're on their rest periods. If you do, they have to start their rest periods over. And every single time you have one of your employees who messes this up, who doesn't take a rest period because there's just too much work, or they take a 29-minute lunch instead of 30 minutes, that is a violation of California's labor code, and you must pay penalties associated with those violations.
So do people come forward and just say like, oh, I realize this happened, and then I mean, what's that process if people know they're out of compliance?
Well, the problem becomes this. Most times the employee doesn't bring it to the employer's attention until after they've been terminated, right? They're out the door. They go to an attorney. The attorney says, well, let me take a look. How were your meal and rest periods? And they say, well, here's when I was allowed to start taking my lunch periods. And the attorney goes, oh, that's out of compliance. And a lawsuit ensues. Where the burden falls is squarely upon the employer. That's why I said on that last slide, every single pay period, you should have an employee who is looking over the pay stubs, looking over your time and attendance records to make sure that everything is accurate, to make sure that everybody got their meal periods, their rest periods, their overtime was properly calculated. And you do that before you put the check in their hands. Because at the point that the check is in their hands, you can't unring the bell at that point. The violation has occurred. You still have an opportunity to fix it.
Geez. Well, and you mentioned you kind of use the term shift, right? So I get it. I've been into some, some of our business owners that are manufacturers, and they have a clear system set up, right? They ring the bell, take a break, they ring it again, go back to work, right? So that seems to be a little bit clearer. But what about with just office jobs, right? Where where you make people aware of here's what you're entitled to, and what's the supervision capability or requirements of, oh, did you get up and go walk around the building for 10 minutes, or did you get up and go have coffee and chit chat with your coworkers? Like, how do you monitor and really manage that?
Well, and let me take it to one more step. Over the course of the last 18 months, as we've had more remote workers, more work from home being done, how do you make sure that the person who's sitting in their living room, who's working for you, is actually getting up every couple of hours to take a 10-minute break or taking 30 minutes off the clock? Unfortunately, the way the law is drawn, our job as employers is to lead the employee to the water, right? And the argument is we can't make them drink. Well, the problem becomes if the employee tells a different story. Well, yeah, my employer told me I was supposed to take a meal period, but work was so busy, I just couldn't get away. Or there was no way for me to take a break before the 5th hour of work because that's our busiest time during the day, especially in the retail or restaurant business, right? If you start scheduling somebody in the morning and you expect them to work all the way through the lunch shift without taking a break, you have a problem. You need to make sure that you're scheduling things better and planning things out in advance. And then not just having a paper policy, but training your managers, understanding that they are your eyes, your ears, and your mouthpiece out there in their business. And if your managers see that somebody isn't taking their breaks, they need to walk up and go, hey, why haven't you taken your break today? There needs to be affirmative acts taken by the employer to protect, to ensure that the policies that you have written on paper are actually being put into effect out on the manufacturing floor or out on the workplace floor in a retail or restaurant location.
No, there's a lot there.
There's a whole lot.
Yeah, and I do want to ask one question. As our office, we like to celebrate staff anniversaries, staff birthdays. We'll order luncheon. It's not really a working lunch, but it's kind of, I don't want to say it's required, but it's encouraged. So how does that get factored into that dynamic?
Well, that technically is viewed as a work lunch. And that means that you bring food in, everybody celebrates the birthday, a little bit of business gets talked, and then they take a 30-minute off the clock break. This comes down to the no good deed goes unpunished in the state of California. The time must be the employees. The employer cannot put restrictions or limitations on, well, you could go, but you probably don't want to miss Jane's birthday type scenario. When you do something like that, you have now all of a sudden maintained dominion and control over that employee's time, and it is paid compensable time.
So let's say you pay for that time, the lunch hour that's right in the middle of the day. And then you give them a 30-minute break after. What if the employee says, I don't need that 30 minutes. I'm getting back to work.
Yeah. And your job at that point as a manager is to say, I appreciate you saying that. I love your work ethic, but California law says we have to do this.
All right, let's move on. Okay, so I'll let you kind of take this one.
Yeah, I'll just fly through this because I think a lot of folks know this. This is basically what I call my common sense slide, but I just want to flag it for people, especially small business owners who aren't thinking this way, because every single year the rules change, all right, without fail. This year in California, we have seven new requirements for changes that need to be put into play in your business if you're a small business owner. These affect meal and rest period requirements. These affect leaves of absence. These affect CalSavers for a lot of you that are out there right now. You should be conducting an annual audit. And this isn't just a, hey, let's read through our handbook today. This is sitting down with a professional HR executive or with counsel going, are our policies accurate, correct, and compliant with California law? Part of that obviously includes updating your employee handbook, making sure that your policies and procedures are what you actually do. I can't tell you how many times I've been sitting in a deposition where someone will read off a policy saying, do you actually do this for your employees? And the executive or the manager looks around and goes, I didn't even know that was our policy. I didn't even know that was in our handbook. These are important things to make sure that the handbook is true, is accurate. Just because you think that some lawyer put it together because that means you're compliant, if you're not following the policy, it's almost worse than having no policy at all. Written job descriptions, I mentioned it before, especially for your exempt employees, but this should be across every category of employment now. California has the Equal Pay Act. It's called the Fair Pay Act of California. I could spend 2 hours just talking about this one bill alone. If you don't have specific delineated roles, responsibilities, and guidelines for each position, then you are out of compliance and it can put you in big hurt from a penalty standpoint. Auditing every exempt employee's classification. We talked about those 2 hurdles that every exempt employee must meet. You should be sitting down with that employee every single year with the job description in hand saying, I want to make sure this is what you're still doing. These are your jobs and your responsibilities. We're still on the same page with this. Making sure that we have a wage claim release. This is for your non-exempt folks, your hourly folks, or the people who are punching in and out. At the end of every pay period, they should have their own opportunity to review their time, whether it's electronic, whether it's a physical time card where they've got punches on it, or whether it's a handwritten time sheet. And at the bottom of that statement that reflects their hours, they should be signing a statement that says something to the akin of, all of the hours reflected above are true and accurate. I did not work any unauthorized overtime. I received all of my prescribed meals and rest periods, and I did not sustain any known on-the-job injuries this week. If you guys would like that wage claim release language, please email me. I'll be glad to send it to you. I want to make sure that every California employer has this on every single pay stub, because it is incredibly valuable information. If the employee later comes back and goes, well, I never got a meal period, I never got a rest period, I hold up that signature and I say, well, why did you sign this? Why did you attest to the fact that you got this if you claim today that you didn't? Are you lying today, or were you lying when you signed this? It's a powerful little move that we can make. Every new employee should be getting a Labor Code 2810.5 notice. If you don't have this in your repertoire, it's a form that is pre-printed by the Division of Labor Standards Enforcement. It's the Labor Commissioner for California. Every employee must get it when you hire them. This lays out who the employer is, what the wage rates are, when they get paid, etc. It is a form that you must fill out and provide to the employee, having them sign when they're hired. If you don't have a 2810.5 notice, it is a $1,000 penalty per employee every single time you fail to provide that. And then finally, best practices today in California. I know it's expensive, guys, but employment practices liability can save your business. We just had a situation with a very small business owner. They have 14 employees. They did purchase employment practices liability. The attorney's fees alone in that case were $360,000. They never would have been able to pay that on their own because that was more than their annual budget. That's how small this business was. It paid all of the attorney's fees to defend the case and the monies that went towards settlement so that the business owner didn't have to pay that out of their pocket. Talk to your broker. See if you can obtain employment practices liability insurance. There are fewer carriers in California than there were 5 years ago, but it is today, I'd say, an essential part of your cost of doing business in the great state of California.
Okay, well, this list of 7 makes us all want to continue to hire and grow our business, right?
Yeah, in the state of Arizona.
Lots of compliance requirements. Well, that's really helpful. So, all right, so we're going to transition now into a section that I call business and tax planning, and it's coming back to an earlier slide that really talks about this idea of working on your business. I know we all get busy with our personal lives, family, growing the business, our clients, and customers. And unfortunately, we don't spend enough time on a lot of the important stuff. And so, it's this idea that I feel like most people's day, you get in there, what's urgent, what do I need to do versus, or what do I have to do now versus what should I do to actually move the needle for the company. So I would really encourage, and I'm going to kind of walk through a scenario here, is really start trying to make sure you're carving out time to focus on the important stuff. And so kind of a best practice here, and this is what I've been doing for the last couple of years, is schedule a monthly planning day away from the office and eliminate distractions. So get away from the office. And the reason why I think you want to do that is a lot of times these important activities take time to think about. You can't have interruptions. It's like the start-stop ideas. You start working on something for a half hour, you're just getting into it. If you have to move on to another task or do a client call, it takes you away and it's highly disruptive. And so to help you run a better business, really get into a habit of scheduling, putting on your calendar 1 day a month where you can focus on your business. And so some of the things that, Brian and I went through, but this is a little bit for, we realize we're probably dealing with mostly S corporation owners on this, maybe LLC, maybe sole proprietor, but these things do involve obviously most S corps, but things that you have to do as a requirement to make sure you don't pierce the corporate veil. Most people set these corporations up for tax reasons, but also some liability protection. So this is just a list. I don't need to spend a lot of time here, but make sure you're updating your bylaws. Make sure you're holding annual minutes for your directors and shareholders, which might just be me, myself, and I, right? It just might just be you. Make sure you're dealing with any annual filing requirements. Make sure you're documenting major business decisions, right? Because you're a corporate entity. There's responsibilities that you have. And a big one that we see too often than not is this last one: avoid commingling business and personal assets. You don't want money just flowing back and forth because then it doesn't look like a corporate structure. And so you want to really be careful with this. And Brian, I don't know if you have anything else to add just from a compliance perspective.
I do. I'd like to just touch on that real quickly. Understanding that commingling is the #1 way that people are able to pierce the corporate veil. What that means is all of a sudden, all of the efforts that you put into play to establish an S Corp or an LLC, or heck, even a C Corp, gets torn apart, and all of the shareholders, all of the directors, all of the leadership of your business are now potentially personally liable for any of the mistakes of the corporation. That means that they can come back after your house. They can come back after your retirement account. They can come back after your portion of community property if you have a spouse in the state of California, in order to seize assets, in order to make the judgment whole. Ensuring your corporate formalities, making sure, listen, guys, this process takes no more than a couple of hours a year to do right. And as long as you've checked the box and ensured that you've done the minimum requirements by the state of California standards, there's no opportunity that someone will be able to pierce through and attach your personal assets. You spent the time, energy, and effort to set it up at the front. Spend some time each year to make sure that you are keeping everything in a good and workmanlike manner. And by the way,
yeah, absolutely.
Most small businesses, they host their annual meeting of shareholders at Starbucks or at a restaurant. And it's, two partners or you and your spouse, and you sit down and literally you get a pre-printed checkbox form. And I'd be glad to provide you this form where you go, we met on Tuesday, the 15th at 9:30 a.m. It was a 35-minute meeting. Here are the 3 things we discussed. You sign it at the bottom and you drop it into your file and you're done for the year. That's it.
Yeah. That's a great suggestion. I mean, Brian, you've kind of offered a few like checklists and forms and some of the language. So maybe one of the things we can do is put that together. So when we send a follow-up from our webinar today, we can provide some of those resources.
Happy to.
Perfect. So let's talk a little bit about this monthly planning day. I'm going to walk you through, and the reason why I'm going to walk you through this is there's some really fascinating tax benefits that most people aren't utilizing. So kind of this idea of like this think day, really a monthly planning day. How do you do this? And what do you actually get done in this? And so our recommendation: take a full day, uninterrupted, without distractions, away from the office. And so there's a couple of things you can do, right? You can rent out a nearby conference room at a hotel. You can go to a country club and get access to a room somewhere that's private. Starbucks, maybe, you know, that you're going to get a little bit more distracted there, right? I like the idea of going somewhere where you truly can work. The other option is you could rent out your primary residence to your business, right? So this would be an effective way if you can, you know, get the family out of the house and then utilize your house for this purpose away from distractions. And so if you utilize this last tactic and rent out your primary residence to your business, you might be able to use part of the IRS code, which is the IRC section 280AG, aka the Augusta rule. I'm sure many of you are going to probably Google what that is. I'm going to kind of walk you through. So this is really what we call advanced planning. This is part of the tax code. And I'm not going to give you all the background on it because it would take us far too long. But basically, this part of the code gives homeowners the options to legally rent out their home for up to 14 days per year without having to report the rental income on their individual tax returns. Now, technically, they do report it on their individual tax return, but it's not taxable. We all know this in California because we live in a state where there's a lot of shooting of movies, commercials, and where people will rent their homes out, right? So we're familiar with this in that area. However, because you're as an individual and you have a corporation, you rent your personal home to the corporation for the purpose of holding the basically kind of a planning day or a planning retreat once per month. So if you take advantage of renting it for 14 days, you do want to get comps. I'm using 2,000 a day. It depends where you live, and we can help you kind of figure out what the appropriate comps are. That means $28,000 would be deducted from your corporate tax return, lowering your net income by $28,000, which essentially would be able to move that off tax-free. So the big part here that I really warn clients of is, what's your risk as the business owner? Number one, not having a business purpose to rent your personal residence to the business. That's number one. And then number two is not having the documentation to support the business. So as we've introduced this to a lot of our clients over the last couple of years, they love the idea, but then, okay, what's the purpose? What are you doing? What are you covering? Do you have minutes? Do you have notes? Do you have a rental agreement? Do you have all these things in place? Did you 1099? Did your company issue a 1099? All of these things are part of the documentation process. And, Brian and I, uncovered there's a lot of work that goes into really working on your business. There are things that you need to do from a people compliance to just understand that. There's things you should be doing around just, managing a business plan, looking at your goals. There's plenty that you can cover in an 8-hour day. And this is a really good way to not only run a better business, but also to get a nice tax benefit as well. So what we actually help with, and this is something that we can give you as a template, is create a monthly planning agenda. What's the meeting summary? What did you cover? Are there any personal and business updates? What are some of the biggest challenges? Productivity suggestions. These are things that we kind of help with. Resources and needs, key objectives, right? If you're working through a business plan, that's stuff that we try to help with. Is what are the things you should be reading? And then questions for us, your advisors, or your professional team, right? Because we know throughout the course of going through this process, you're going to have questions, right? So if you rely on an employment law attorney and you have a business attorney and you have a financial advisor, CPA, there's going to be things that come out of this that you don't have the answers to, and you want to document that, and that'll help you follow up to actually continue to run a better business. We also create what we call this kind of business compliance and best practices, where what are the things we should be looking at? And, Brian's probably got a list of, HR related, California related deadlines, things you have to comply with. And this is a really good example of putting these things in place. So when you're having this meeting, you're not missing things. And as you grow a business, you're not going to be you're not going to be executing on all these, but you have your team that can help you. So if you have a deadline around, all right, we need to adjust our salary and our minimum wage, and we need to work with our payroll team. Well, maybe you're planning that out in May or June to deal with that, because you might want to have a review with your employees. You just don't want to give people a bump just because it's mandated. You want to have a conversation. So again, it's just being more thoughtful about it And it's just really a good habit to get into to help you drive your business goals forward and drive your personal goals forward. And so it's really an opportunity to have that quiet time and really focus on your business. And so, Brian, I don't know if you have anything else to add on that, but otherwise I can move on to our payroll optimization.
We can go ahead and move on. But yeah, I already had touched on a couple of things. Listen, January is a big time. July is a big time. I mean, candidly, those 2 months of the year you should be dedicating to human resources, policy revisions and changes. And then also it's a great time to also set up a review of the job descriptions to make sure that job descriptions are accurate and up to date. So everything on my best practices list, you could split up between January and July, and you'd be just set and ready to go.
Yeah, and just to you just add a little bit more on that as well. So, if you're going through a full review of all your employees and what you're paying them, you might want to take your HR person or your controller, COO to your house and have that quiet time, because you're going through a lot of sensitive information. So the benefit of getting out of the office is, yeah, you want to remove distractions, but you also are sometimes dealing with sensitive things. And we all know offices, you can kind of hear a lot. Our conference rooms definitely aren't soundproof. So it's a good habit to get into. Sometimes these meetings are going to be with just yourself. You might have your bookkeeper at one, you might have your attorney, and just go through this. It's a great habit to get into. And if you're not doing it, let us help. We can kind of get you started on that. All right. So next topic we're going to run into is what we're referring to as payroll optimization. So too often than not, business owners are not paying themselves appropriately. They have a made up number. They're not paying themselves. I've seen too often, it's like, oh, what did you pay yourself? And this is as a wage, W-2 wage. Like, well, I paid myself $50,000. I said, well, your office manager is making 90 and you're the CEO. Does that sound right? Do you think that you could replace yourself as CEO for that wage? So too often than not, people have a kind of a made up number. It's not based on the profitability of their business. It's just kind of a random number. And oftentimes it's done to avoid payroll tax, to be frank. I mean, that's why people underpay themselves, is because they love the idea that if I'm an S corporation, I can underpay in the W-2, take larger profit distributions, and then avoid payroll tax. Well, that's an area that it can, is an audit risk. You really have to be careful of. But what I'm going to actually go through is how to maximize some of the compensation for small business owners and their families. And, one of the things, before I forget, I think we have a disclosure slide somewhere in here, but it's really important to know that what Brian and I are going through today, this is not tax advice. This is not legal advice. It's really important that if you take these concepts and you say, hey, this might apply to me, is go talk to your professional that helps you in these areas around legal issues. Brian and I are trying to give you a flavor of what's happening out there, but everyone's unique situation, everyone's situation is unique to them. So you can't take this as actually advice. Please just know these are planning strategies to help you run a better business. So let's go into some areas. So one of the things that we realize is most small business owners who are married, their spouse is heavily involved with the business. It's just kind of natural. You're having the conversations about employees. You're having the conversation about cash flow. You're having the conversations about what's going on. And a lot of times spouses are in the workplace where they're helping out. And too often than not, I see that spouses are not on payroll. So one of the benefits of being thoughtful about how you pay yourself and your spouse is that if you add your spouse to payroll, you can potentially increase your retirement contributions by about $55,000 a year. So depending on what tax bracket you're in, if you can add $55,000 to their retirement plan, it solves two issues. It helps you save for the future, but it also helps you to lower your tax liability. So that's one area. The other thing that I love seeing is adding children to payroll that are in junior high, high school, and college. We know the value to children is the benefits of working at a young age. If you have a family business, it's really important to understand how the family business works. What's that legacy? And it's a good reminder of getting your kids involved. And so Brian's going to probably run through a little bit of the issues around documenting job descriptions, time cards, things like that. But one of the big benefits of basically adding children to payroll, depending on your tax bracket, if you pay your child, let's say $12,000 a year or $1,000 a month or $250 a week based on the work they're doing, you can likely save somewhere between $4,000 to $5,000 per kid per year in taxes. So there's a substantial benefit of doing that. And then also it can kind of help fund a college account. It can help fund a Roth IRA, things that can start setting the kids up for success, because I know we all don't want to give our kids that much money, but we can put it into areas that are going to benefit them long term.
Well, and the funny thing about that, John, is, I love this idea of getting family members into the business, spouses, brothers, sisters, children. If you are bringing in a minor, though, I would just want to flag a couple of issues. I don't want to spend too much time on this or belabor it, but California is also very, very restrictive on how we employ those individuals under 18, even if it is in a family business. Understanding that work permits will be required from the local school district for anybody who is between 14 and 16 and 16 and 18. Those people who are 14 to 16 have very, very restrictive hours that they can work. So you have to be delicate and careful about how you're documenting the work that's being done by the individuals that are under 16 years old. But between 16 and 18, they basically have just some restrictions to make sure that we're not overworking these kids, because they are supposed to be in school on a full-time basis. That means that they're not allowed to work more than 4 hours per day on school days. They can't work any more than 8 hours per day on non-school days. So that would be Saturdays, Sundays, holidays, etc. Really what it comes down to is expectation that school is first and work is second from the California standpoint. Also, if you've got a family farm, you need to be really careful, because there's a lot of work that students or young people aren't supposed to be doing. Now, the reality of that is we all know that it gets done. We all know that there are minors that work on family farms, heck, even in family manufacturing companies under the age of 18. But understand that they're not supposed to be doing work with any heavy machinery. All work that may be dangerous in nature has to be supervised by an adult. And there are health and safety protocols that go above and beyond just the Cal OSHA requirements for those minors who are working in a dangerous work setting. Understanding that the violations can be pretty expensive. If you have repeat violations, it's $5,000 per day per employee that you are out of compliance. So just be aware of the fact that if you're going to employ kids in your workplace, that you have to make sure that you've dotted your I's and crossed your T's, because also the worst case scenario on this is there are potential criminal penalties. If there's deemed to be exploitation of child labor, even if it's a family member, you could end up in prison in the state of California. Understand that there are specific exceptions on how a family member is permitted to work within your business, meaning that you don't have to have the same restrictive job descriptions that you have for normal workers that are outside of your family. If they're doing domestic work, lawn work, housekeeping, babysitting type duties, you don't have to comply with the obligations or requirements for the work permit. High school equivalency, if you've got a 16-year-old or older who's basically received their GED, or who has opted out of their last years of high school because of whatever reason, they need to work, they have opportunities to work, then the minor permit requirements are waived. And then also apprenticeship. These are people who are involved in very specific areas, usually very skilled trades. Think woodworking, plumbing, etc. Skilled apprenticeships, there are exceptions, but they are very narrow and very specific to the industry that it applies to. Homeschooling, I get this question all the time. Well, what happens if my kid's being homeschooled? They're really only going to school Tuesdays and Thursdays physically in person, and they can work Mondays, Wednesdays, and Fridays 8 hours a day. No, that is not the way it works. Again, if they're under 18 and they have not reached high school equivalency in way of their GED, they are subject to the same rules and regulations as if they were in class Monday through Friday.
Okay, just to clarify, you said that even for family members, if you have a 16-year-old in the house that's working for the business, you need to get a permit for them?
You are required to get a permit unless you fall within specific industries. So the work permit for family members there is a narrow exception, but it is based upon certain industries. Manufacturing is not one of them. Manufacturing, you must have a work permit for the employee to work in that location.
And what about like office work, if they're doing data entry or scanning, shredding, things like that?
They're supposed to have a work permit. Wink, wink.
All the way up to, yeah, all the way up. Obviously not at 18, but all the way through 18.
All the way through 18. That is correct.
Okay.
Through 18 or high school graduation, whichever comes first.
Okay. All right. Well, that's helpful. Okay, just a summary that I want to go through at just a high level. And again, these slides will be made available to you as part of our follow-up, but one of the things when we look at some financial planning strategies and kind of going through how to implement all these, sometimes you might look at the each of these benefits and see, okay, am I going to save that much money? Is it worthwhile to run these numbers? So, one of the things you start with, and we're going to go left to right on here, is do an annual personal tax return review. We have a really great tax planning tool that can actually go through and do an evaluation of your current return. We scan it in, current return, we can do current, basically this year, and then we can actually now, with the proposed tax changes, we can then model what that might look like for your tax return. So it's really great. And most of you who own a business, if it's a pass-through entity like an S Corp, LLC, or sole proprietor, your personal return is where all the income comes through anyway. So that's a really helpful thing to evaluate those options. Implementation of the Augusta rule, that will, if done properly, depending on the business purpose, you can save about $5,000 to $15,000 per year in tax savings. Payroll optimization, again, hiring spouse and children, if done properly, between $5,000 to $20,000. And then retirement plan design, especially for business owners, where we can really look at deferring anywhere from $7,500 up to $100,000. So if any of you are running a small business with very few employees, especially as you're getting closer to retirement, there you can actually put pretty substantial numbers in excess of $200,000 to take advantage of some of these big tax deductions. So just wanted to give you kind of a brief summary there. And then as we wrap up, I know we did not do Q&A. Q&A is a little bit clunky. Brian and I love having live audiences where we can talk to people, and it's a lot more fun. I did enjoy our conversation today because at least we could kind of communicate with each other. But if you think you would like our services or just have a preliminary conversation, Vance Wealth, so we're offering a 30-minute complimentary consultations. You can either book at our website or just call the office, and we'll schedule time. I would recommend, if you have some of these needs, let's do it now, because I think once we get into November, we're going to be so focused on our current clients, we're not going to have time to get people in to try to kind of cram in our year-end planning. It needs to be more thoughtful versus just kind of doing it quickly. And then I'll let Brian speak to his offer.
Yeah, and John, I reflect the same thing. December and January are my two busiest months, as you know, because the laws have just changed. They usually become effective on January 1. And as I mentioned, there are 7 different rules that apply to California businesses this year that have changed. So I will be dealing with a whole bunch of crazy busy time period in that window as well. So if you'd like to reach out to me in the next 30 to 60 days, I would love to sit down and chat with you, provide you with any further information that you may need in order to make sure you're coming into compliance. Listen, I venture to be the trusted advisor. I want to be the person that you come to first. In the legal world, especially when we talk about employment law, an ounce of prevention is worth more than 100 pounds of cure. And a little bit of work up front goes a long way to preventing litigation or painful claims down the line.
Yeah, and Brian, I mean, that it's so true. Most of the time when we've talked in the past, most business owners are coming to you when something's broken, they're getting sued. And, that's why I always appreciate listening to your annual updates, because it gets you to be more proactive. And it just comes back to that whole idea of working on your business. There's just things we have to do. There's responsibilities we all have when we run a business. And you can't just claim ignorance. Well, I didn't know about that. Like, it's up to you to learn. And that's why you trust, a team of professionals. Hopefully you've enjoyed our webinar today. But yeah, just know that, we are available. Brian and I also have teams. So if you reach out to us, depending on the schedule, you might get an attorney that works with him. You might get an advisor on my team. So, our job's here to be helpful, and please share this. I'm sure you have other business owners that are not aware of some of these rules. Hopefully this was insightful. And again, Brian, thanks for your time. I really appreciate it.
Oh, John, thank you so much for having me. I do appreciate the opportunity to reach out to your folks, and really do enjoy the back and forth that we get to have on these type of things, because I think we both really truly care for our clients and look out for the end result, which is a successful business relationship.
Absolutely. All right, everyone. Have a good one.
All right, guys. Have a good afternoon. Bye.